Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Wednesday, May 14th, 2014. Markets are trading flat to slightly lower at this time of day. And again, it's a very quiet day on the market front, but that doesn't mean it's quiet everywhere else. And I think this is the most important factor for today. While we see the S&P down 4 points, Dow down 62 points, and the NASDAQ down about 9.5 points, the real story here is the bonds. All right, we are seeing yields plummeting and bonds obviously rising in response. The 10-year is down to 2.545. That's the lowest level on interest rates since last October. That's a long time. Remember, we were at one point around 1.5 on the 10-year, and then it went to 3. Now it's back to 2.5. And again, this is big because it influences, first of all, housing. If the economy truly is getting a little stronger, it'll help housing. But there's a negative here. If interest rates are falling, especially in the face of the PPI numbers today, Producer Price Index, which showed a lot of inflation, then you have to take what this means as the economy is not strong and the bond market, which is bigger than the stock market, does not believe it is going to get stronger. So net net, that's not a good sign, especially with the inflation data we got today. And again, the PPI was reported at a 0.6% increase. That's huge, folks. That is absolutely huge. So again, things like this, it's not as clear cut. A lot of people would look at and just say, "Oh, look at yields. I mean, look at interest rates. They're falling." But it's definitely not that good because of what it spells for the future of the economy and what the bond market believes. So, having said that, again, the markets are slightly lower. Interestingly enough, what we're seeing here is a market that trended above this upsloping trend line here, broke out above this little line right here, and consolidated yesterday into this line. See these two upsloping lines? All right, it's really amazing how these trend lines work, and I can show you where they come from very easily. This one right here comes from this pivot point to this pivot point, and then this one down here, again, I've shown you guys the last few days, but it comes from this pivot to that pivot, which then extends to this point. And the converging two trend lines happen to be right here where the market kept on hammering yesterday. Notice how today we gapped below them. Now, the market hasn't collapsed by any stretch. I mean, that's not even a question mark here. The market's only down a little bit on the day, but I just think it's amazing how this was so much support. So what does the market do? It just hops right over it on a gap. And then it falls a little bit and then trades inside of this whole entire move. Now, a couple interesting factors here that tell me to be wary of this market. All right, after Monday's rally and we were above this area even yesterday, I still had a neutral to slight upside bias for the next few days. But believe it or not, assuming we end below these upsloping trend lines, which I do believe we will today, and you have this little bearish consolidation pattern in the charts, I think you got to be really careful again. I don't trust this market any more than I can throw it, and I can't throw it very far. So we are seeing, again, warning signs, and I talked about this yesterday, how if you look at Monday's price action, right, technology led the charts. We had the NASDAQ having a monstrous day, and the Dow lagged, which is what you want to see. All right, the Dow was still up on Monday, but it was percentage-wise up less than the NASDAQ. Now remember, that's a good sign because that means people are willing to take risks because they think the economy is going to do better. Right? Remember that they're risking beta, which is volatility, by jumping in Twitters and Facebooks and LinkedIn's and all these, biotechs and you name it, all the higher beta stocks, which are the higher volatility stocks. That was what we saw on Monday, and I thought that was a potentially good sign for at least a few days as the market could maybe get a little bit of a boost and we see some follow through. Yesterday, even though the markets ended basically flat to slightly positive, NASDAQ was still negative. And that's a right back to same old for the charts. And today, again, to see this market consolidate right here above these lines and then today not get a push up, instead get a small gap down, that makes me very nervous about this market. Now, again, with the lack of volatility today, I mean, look at the volume today, 38 million. It's a joke today, literally a joke. It's 2:30 p.m. on the dot right now, and we only have an hour and a half left. And to do 38 million on the spiders. I mean, we're on pace to do about 50 million today, guys. It is ridiculously light, especially for a Whipsaw Wednesday, the Wednesday before options expiration. But anyways, bottom line is, I'd be cautious here. I did short a new stock today, and you can find out by joining the research center. If you haven't joined ever, then you can take the 7-day free trial to the research center, and all our trade alerts live are posted there. I also took profits on a trade today, and it was a short trade as well. Let me just show it to you guys. I took my profits on Whirlpool. So I've been short Whirlpool since about the 152 level right in here. Let me go to the daily chart. I want to show you this. Now, I do think there's more downside in Whirlpool, but I noticed, and I took my profits right into this 200 moving average here on the daily chart, and I said to myself, listen, it's had two big, huge fall days. Let's not get overly greedy, especially since it's into this level. On a bounce, I can always reshort it. So if it bounces for me back up to this 50 MA right here in a nice inside bar pattern, then I'll just reshort it again. But I have to respect the market in terms of the market is very sideways. If you look at the spiders and what we've done over the last, 2 months, if we go back to the spiders here, and this is the daily chart, but I'm going to flip back to the intraday chart. I mean, you could even look to the longer term. But if I zoom out, right, I mean, really, this market's been very, very choppy, even angling slightly to the upside, right? So that tells me just to be a little wary, and if I get a nice profit on a short, at least in the short term, I'm going to take it. Now, I'll look to re-enter that short because net, I believe this market's going to go much lower down the line. But who knows if we're going to jump back up on some of these stocks with the market and so forth. So I think that's the smart move to take right now, and that's the way I'm playing it. Okay? So that gives you a kind of an outline, but a nice 5.25% gain on Whirlpool as a short-term swing trade short. And again, just kind of, trying to scratch out, while the market's very quiet here, if we can scratch out 5-7% winners, that's really all I'm looking to do until we start seeing the momentum cascade to the downside. Then I'll let these new shorts that I'm accumulating run a little bit more. Okay? So that's what we have going on there, folks. And again, it looks pretty solid. I do have some other short candidates out there, but I'm not going to discuss them here openly as that'll be reserved for Research Center members. Couple stocks just to go over here that are interesting as Alibaba's IPO gets closer. Take a look at the Yahoo chart. By the way, Yahoo chart right here, that's an in spirit of bearish pattern consolidation below the moving averages. That's not a good sign. I mean, you would have thought a lot of, even the analysts on TV, like Fast Money guys, they are like, oh, Alibaba's going to lift Yahoo to $40+. Not the way the chart's looking at it. It's not. Not at all. And it's funny because, I still remember they were pumping it right here that it was going to go to 40 when it was trading at like 37, 38 right here. And then it collapsed back down. And now you're actually making an inside bar bearish pattern. In any case, if we take a look at some other charts out there, Twitter's down slightly on the day. Twitter's trying to put in a little bit of a bottom. I think it's going to come down and retest the lows again before it makes a longer-term bottom. I actually think it could go as low as $26, which was the IPO level. So something to monitor there. And if we take a look at JP Morgan today, JPM slightly lower. The financials are a good indicator here to be wary of the market too. Very weak price action on the financials. See that? I mean, look at the chart here. The S&P right now is right just underneath the all-time highs. The Dow hit an all-time high. Look at JPM's chart on the daily chart here. Not a pretty chart at all. So little things like this definitely want to make you on the warier side. If we take a look at Apple today, Apple's basically flat to slightly higher, up $1.85. Still kind of in that upper range. I think it's waiting for this 20 to slope up underneath, and maybe it gets that pop to that 615, 620 level. But again, we'll take it one step at a time with that. And I think that's about it. I mean, for the most part, Chevron, you can take a look at Chevron, up 84 cents, and this stock continues. Any weakness in the market is a buying opportunity for stocks like Chevron, Exxon, and some of these other boys, these other safe haven stocks that I've been talking to you guys about. All right. On that note, folks, I'm going to bid you farewell for the day. But again, take the 7-day free trial to the Research Center. Get our swing trade alerts live. Get text email alerts. Get everything you need to know. Videos daily, market reports daily, live broadcasts. Everything you need to know to really profit in this market, whether it's going up or down. And again, we'll just teach you and slowly work with you on our proprietary methodology here, which again has an unbelievably great track record. Take care, folks. Have a great afternoon, great evening. I will talk to you soon.